Hi, Warren Tarl, Tarl Accounting, the tax strategist. And let's talk right now about crypto assets, cryptocurrency, Bitcoin. Let's in particularly talk about donating those crypto assets. Why would you want to donate crypto assets? Well, first, let's assume that your cryptocurrency has appreciated in value. There's a special tax break out there for donating appreciated assets. Like if you have a stock that's gone up or real estate that's gone up and you donate those things to a charity, you get a special tax break for it. Well, the same thing works for cryptocurrency as well. It falls into that same category. What's the tax break? Well, the tax break is that you get to donate that asset at whatever its current value is. So let's say you bought it at $5 and now it's worth $15. You get a $15 charitable donation. And here's where the break comes in. You don't have to recognize the capital gains that went up, that caused that to go up in value. So that gain is tax-free and you get the deduction at $15, as opposed to selling your asset for $15, then donating the money, because in that case you'd have to obviously pay tax on that $10 gain. We get to avoid paying the tax on that $10 gain by donating our appreciated asset. And that's one of the advantages to having cryptocurrency and having it appreciate. Of course, there is a catch, and this catch counts for all appreciated assets. All non-cash donations of $5,000 or more must have a qualified appraisal. Some of you say, well, I don't really need an appraisal, right? Because there's a crypto exchange and that exchange has value assigned to it. For example, if you were to donate a stock traded on the stock exchange, you actually don't need an appraisal. You can rely on what the stock exchange price was for that day that you donated it. The IRS has recently come out with a ruling, however, that says for crypto assets, you cannot rely on the exchange's value at that time. You actually have to get a qualified appraisal. And what's a qualified appraisal? It's appraisal done by a qualified appraiser. Here's the thing with charitable donations. If you don't follow all the rules, there is no makeup for it. In other words, let's say you don't get the appraisal. The IRS decides to audit your return and they determine that you didn't have the appraisal. You can't go back and give them an appraisal later. You can't even file the return, realize you forgot the appraisal, and then add that to it. The appraisal has to be done before, or else the IRS will deny the deduction. Think about next time you're going to make a donation that you would normally make to support whatever charity you choose. Look to your appreciated assets. Look to your cryptocurrency.